Yo guys, what's going on? It's Lewis here with Crypto Leads, and today's date is January 17th. It is a technical Tuesday, even though it's technically Monday when I do this, but by the time this gets uploaded, it's most likely going to be Tuesday. And I'm doing another market update. So I have there's a lot to talk about, pretty much. I've been long, I've called it numerous times, long at $40,000 Bitcoin, long at $3,000 Ethereum, and I've just been waiting and waiting and waiting. It has been super boring for the past week, and nothing has happened. We've had all of these other plays like Phantom, Atom, and some other coins that were just going up and up and up. I missed most of them because Bitcoin was going down, so obviously you don't want to be in altcoins when Bitcoin is going down because altcoins tend to go down significantly more than Bitcoin when Bitcoin goes down. So we have that, and we did catch the Cardano play, which is awesome because Cardano is the only one that has continued to go up even today. So that's really cool. And now things are looking really scary because basically we longed at 40K. And I said, we're going to 40K, we're going to $45,000. I said, we're going to $45,000. So long it to 45, 46, and then I will reevaluate then. If you've been following me, you've been following my TikTok, my Twitter, these market updates, you know that that's the case. So basically, we longed at 40, you say 45, 46K, and then I'll reevaluate. Well, we didn't even get up to 45, 46K. You'll see that in this update. And things, it already crashed down from 44,000. So now it's like, damn, it couldn't even get to 45 resistance. And 45 was the low end, 46 was the high end. So couldn't even get there. What does that mean? That's pretty bad. However, with saying that, the on-chain analytics are very, very bullish. So lots of things to consider, but ultimately I do go by the charts and what the charts say. So we will have to check that out. I think on the higher time frames, things are looking better, but on the lower time frames, I am a little worried. Plus, I got a ton of alerts going off in my trading view last night, way more than average, and that scared the hell out of me. So I got out of a lot of positions. If you're in the VIP, you would know that. I think I also posted it in the free chat as well. So if you're not part of the free chat or the VIP, click the link down below in the description and you could join those groups. And, we actually did very well or at least, I got out of my positions and things are down like 10% today. So who knows if they're going to be down again tomorrow or if that was too preemptive of me to sell. I don't know, but that's why I'm doing my market update right now, to just double check, make sure everything's cool. So we have that, and let's just get started. So the first thing before I get started, I do want to say the link for 3 commas, that's the trading software I use, will be down in the description. I'll also have links for TradingView, I believe, and some other things that I use. So basically, the first thing that I like to do is I like to go over here to YouTube and I look at the Glassnode YouTube channel and I watch their videos. So the first video that I watched, or that I always watch their latest video, right? And so the latest video was extreme leverage at extreme depths. And I watched this, and basically what this said is that if I actually click on it, give me 1 second, I'll find what I want to talk about. Okay, so first thing is first, basically when the price was going up in February, March, April, May, there was substantial selling by the long-term holders, by the people who held for over a year. There was substantial selling pressure. And then during this last rally up to 69K, October, November-ish, we did see a lot more substantial selling. And however, once the price fell down to 40,000, 45 to 40,000, we've been seeing that sell pressure by the long-term holders actually flip into more buying pressure. So there's a lot less selling pressure. You can see there's a lot of selling pressure back here, and then a lot of selling pressure was, starting to happen during here. But now the price or the long-term holders are increasing in numbers. So that's pretty good to know. So on-chain analytics, there's that right there. Plus, there's the factor of this right here, which is the Bitcoin entity-adjusted dormancy flow. And what you basically need to know about this is that every single time that this hits the lows, that decreases, that shows a decrease in the selling pressure by the holders. And like you could tell that from this as well, that there's decreased pressure, selling pressure of the long-term holders. And if you zoom into it, you can see that every time it reaches this green box down here, that actually indicates the Pico bottom for Bitcoin, for the Bitcoin price. You can see that happened in 2012. It happened in 2015 right here. It happened in 2019 right here. And then again in 2020 right here, as soon as it touched this, it reached the Pico bottom. And even during the summer cycle, it reached the Pico bottom of this market. So you know what? It's back here. And yes, it could definitely fall lower. But it is showing, this is pretty darn bullish, for a bullish case for the on-chain analytics. Finally, we have the open interest. So you need to take a look at the open interest. And if you take a look at that, you could see that it is rising drastically. So this is a Bitcoin futures open interest. It's at the highest level ever. So there's a lot of open interest happening. However, the open interest is most likely for shorts, for people who are shorting the market, continuing to short the market as the price goes down. So as the open interest rises and the open interest is in favor of the shorts, so people are shorting the market and it's super, super high, what does that lead to? Many times, sometimes it leads to a short squeeze. So are we going to see a short squeeze? I'm not sure, but on-chain analytics are bullish, so it is showing that. However, with saying all of this, I look at the charts. I use the charts. This influences my decisions somewhat, but you never really know like what's really going to happen based off of on-chain analytics, just like how you never know what's really going to happen based off TA, but at least you have a game plan based on TA and quickly change your opinion based on what happens in the charts. When it comes to on-chain analytics, these are sort of lagging indicators, so you have to not take it with a grain of salt, but you have to look at it and use it in your overall analysis if you decide to do that. Some people just look at the charts and that's it, but you have to use this as part of your overall analysis. So this makes me more bullish towards Bitcoin, but you have to look at the charts to sort of figure this out. So that's basically what I've been gleaming, or what I gleamed from this Glassnode video, which was from January 11th. So it was from last week, 6 days ago. Maybe there's another one's going to come out tomorrow. I don't know, but there's that. So the other thing is that there are a lot of big type of indicators that you could use to determine whether it's the top or the bottom, okay? And all of them are smack dab in the middle. So I'm not even going to go into them. It's the CBBI, the Pi Cycle top indicator, the MVRVZ score, the R-HODL ratio, the rainbow chart, and the Fear and Greed index. They're all smack dab in the middle, so they're not telling me anything. So I'm not even going to go into them. So the next things that I do go into are the total market cap, and the market caps, and then the actual charts. So we could just dive right into those. Okay, guys. So first things first, we're going to look at the total market cap. And the total market cap over the last 1 year is where we're starting. We're starting with the 12-month chart. So this is literally from January 1st, 2021, where the total market cap for all of cryptocurrencies was at $735.69 or $0.7 billion. So it was under $1 trillion at the beginning of January 2021. If you could believe that, after 1 year, from January 2021 up to the last day of freaking 2021, it went all the way up to $3 trillion. So the total market cap for all of cryptocurrency went up over $2 trillion. That is insane. 2 trillion. Absolutely nuts. Not only that, but it came back down to 2.6. So it was at let's just round it off. Let's just say it was sub 1. It went all the way up to 3. And I know I just totally butchered that, but it was at sub 1, it went all the way up to 3, and that was the $2 trillion that it created. And then it came back down, and now it's back at 2. So it's up over $1 trillion from the January lows, which is phenomenal. It's absolutely crazy. And looking at this chart, I am a little worried. I'm not gonna lie, this is worrying me because I mean, look what happened in 2017. 2017, we went from a 12 billion to freaking 624 billion, and then closed it at 535. So in 2017, we had this insane. I mean, this was actually freaking insane. This run up. This was way statistically. This is way bigger than this run up right here. But then we did see this drastic downturn, and like we're not even really close to that right now. So are we going to see another downturn, or has cryptocurrency been validated so much that it's now too big so big to the point where we will never see it drop down this low enough again, like let's say under $1.5 trillion, because the prices, like if it comes down, too many people will be buying, too many institutions will be buying, too many big players will be buying if it comes down to these levels. That's probably that's honestly what I think. I don't ever see it coming down to like, these levels down here, to be honest. Okay, sorry, I paused it and unpaused it. So let's go down to the monthly now. We went from the yearly and now we're going to the monthly. So this is called top-down analysis. This is what you should be doing if you are trading. So then you don't need to start on the yearly most of the time, but it is a new year. It's January, so good idea. Anyway, let's go. So the yearly does look scary, to be honest. And the monthly after this candle and then after this candle came in, that looks scary as well. And when this candle closed, I knew we were going down again, and that's why I had this arrow right here this entire time, because I was like, no, we're going down to freaking 1.9 trillion. And look at what we did. We came down to 1.9 trillion, then we started to come up. So now we're on our way up. However, we did not get to 2.15 trillion, and this is like, so this was the previous monthly close. And when I mean previous monthly close, I mean like right there's the close, and also it was pretty much the high right here. So if we do come back up here, I'd be wanting to sell everything again, because I would think that we'd probably like come up and then come back down to retest this one more time. But dude, I'm not even sure if we're gonna get that, to be honest. Just like looking at the market and everything, it's pretty complicated right now, because we've fallen so much, but things are gotta look at the smaller time frames to determine where we're gonna go. So basically, you look at the big time frames, and the big time frames obviously tell you the big picture, right? But you will know what will happen on the big time frames in the smaller time frames. So you gotta look at the smaller time frames, and then whatever happens on the smaller time frames usually is an indicator of what's gonna happen on the bigger time frames. So we got the yearly, we got the monthly. Let's go down to the weekly. All right, we're at the weekly, and now my arrows are all messed up. So let me look at this real quick. Let me try to look at this analysis, and I will pause the video. I'll get right back. Okay. All right. So, all right. It's like we made the high, we made the lower high, and it's like we're probably going to make a lower high too. I came in with a slightly bearish bias originally, and then I watched the on-chain data, on-chain analytics video, and that made me a little bit more bullish. And now I'm looking on the weekly chart of the total market cap, and look at down here. This is in oversold territory. Look at the MACD. Looks like a bullish divergence with the uptick. That's bullish. That's usually super bullish. And so I'm not overly bearish right now. You can't be overly bearish when you have this on the weekly time frame, and you have this on the weekly time frame, and we just bounced off of the major support. I was looking at this as the major support is the Fibonacci from the bottom to the top, right? 61.8 golden ratio. So I knew we were going to get the bounce there. And normally we get the bounce from the 61.8 up to 30.2. So we should get a bounce to up here. Right now we're right in the middle between this support and this resistance. So you can't base any trades off of this. That's the weekly. Let's look at the daily though. The daily not looking as good, but obviously weekly has precedence because it's the freaking weekly, But daily is, high, lower high, lower high, lower high, I guess. Was this the lower high? Was the reason that we never got back up to this level because there was so much selling pressure due to the 200-day moving averages and exponential moving averages, along with just the shorter moving averages, the 10 and the 20 or the 12 and the 24? Is that the case? I mean, we're clearly this is a bear market, right? Or this is a bearish trend, I want to say. I don't even want to use the term bear market, bull market. I just want to use trends. This is a bearish trend, and it's always like go with the trend. So like if you're going with the trend on a bearish trend, you sell the pops or you short the pops, and then you long the supports, but you take your profits, at the pops, looking for lower highs. That's how you do it. And we have been continually going down. So I guess the real question is like, was this the bottom? Had this major support? Or if we lose this, in my opinion, if we come back down and we lose this $1.86 trillion support on the total market cap, that's game. It's not game over, but like it's freaking, that would suck. Who knows what we come down to 1.56, or we come all the way down to 1.4? Would there be a true bear market? Who knows? So right now it's in the middle, so I can't really base anything off of that. What I will say is that I do have a lot of I do have a lot of stable coins still. And so what I'm doing is I'm holding onto my stable coins, and if the market cap comes back down here, I will buy a lot more cryptocurrencies at this level. That's what I did back here. It worked out fairly well. I mean, not really. Bitcoin and Ethereum are only up like $100 or $1,000 more than where I bought it. So I'm pretty much break even on those. And there was Phantom and One and Atom and a couple other coins that went up, but the market as a whole has been going down. So I don't know. I feel like this candle right here, really, it closed below here, and I really don't like the fact that it closed below here. And because it did close below here, I could see it coming back down here. And I mean, that doesn't really line up with the weekly, but I could totally see that happening, because why would the total market cap, why would it close underneath the previous lows, just to go back up? That doesn't really make any sense. So yeah, I don't know. I came in bearish. Some things looked bullish. The weekly looks pretty bullish, but I'm still exerting massive caution. That's basically the point of this is we don't know what's happening yet. We have no idea what's happening, and things could easily go down much further from here. Even altcoins that have lost 40% of their value could go down another 50%. They could go down another 90%. You don't know. So I'm cautious. I still have a lot in stables, and I'm not betting the farm on anything right now. That's the point. And then to add to this thesis, we could see that the Bitcoin dominance chart is in this area right here, which is the area where it has always reversed from, and we have gotten major crashes. So the first time it touched here, we got the first major crash in May, and then the second time was in September, and then the third time was in November. This is all when we've gotten major crashes. So this is where I say that I should de-risk here. I put that in here months and months ago, and going back into stables. So this is more confluence. And if we go to the altcoin market cap, the altcoin dominance, you could see that the altcoin dominance, which is the inverse of the Bitcoin dominance, is at the highs as well. So every time we hit up here, we crashed, and now we're up here again. This is bullish. This is technically more bullish. However, I don't trust it. I think we should come down, and obviously, if altcoin dominance comes down, that means altcoins are going to take a huge hit. So I am going heavy into stables right now. Yeah, that's pretty much it. I'm reducing a lot of my position sizes. Now let's move on to Bitcoin. Let's go to Bitcoin itself. If we look at Bitcoin, we got the bounce at $40,000, which is, what I said we were going to do. Back up at 58,000. Back up here is when I said we were going to come all the way down. Came down here. Then when we popped up here again, I said it again. We're going to come all the way back down, sweep the lows, get all of the liquidity hunting out of the way underneath this wick, and then we're going to pop up to 45K. But it's taking forever. It's taking way too long to get to 45K. We should have been there by now. It doesn't take a week. If things are bullish, it doesn't take more than a week to get there. And look at this. Like, we closed. Look at this. The daily close right here. We closed well beneath this. This was the no. This does not look good. This doesn't look good. This just does not look good. I'm just telling you this right now. It doesn't look good. The stochastics looks terrible. On the RSI looks okay, but it's like whatever. Look at this. Look at how bad that looks. Yeah, I don't know. I don't care if it pumps up from here. I would rather be cautious right now. Yeah, it's at the 61.8, so it pops up. Maybe we'll get to 42,624 and then come back down. I just don't like it. It would have been way better if we popped all the way up, came back down, and then had one more down candle, and then popped all the way back up again for like a solid 1, 2, 3. But like, come on, 1, 2, 3, 4, 5, 6. There's like 6 or 7 days in this range. It makes no sense. That's not bullish to me. So 1, 2, 3, 4. It's like, yeah, I don't know. I'm targeting 40,000 again. I'm going to target 40,700 again. And honestly, probably like down here at like 39,000 underneath here. But if it, actually probably more like 38,000. Yeah, I think 38,000 might be the move. It's tough to say, but I don't know. I'm not bullish at all. I'm bearish. I wouldn't short right here, but I went long. So, yeah, that's Bitcoin's case right now. Maybe if we close back above this close back above this support, which is now the resistance, I'll get bullish again. But right now I'm bearish. And even going into Ethereum, I'll try to find a good area. Or a good chart, I mean. So this is probably my weekly chart. Monthly is the monthly chart, so monthly. You can't even see it because I have all of my Fibonacci levels up there. Let's just go to the daily because that's all that really matters. Like, look at the daily. It's underneath all of these EMAs. You couldn't get back above there. This is the equivalent up here at like 3,500. That was the equivalent of 45,000 for Bitcoin. It didn't even get up there. And now look at this. It's underneath. It closed underneath here as well. That makes me want to target at least 3,000 again, which is not really that far away. But most likely that'll break as well, and we'll probably come down there. So I don't know, 2,800, 2,700, 2,800, maybe 29. Because look at the. Oh wait, no, this is a 2-day. Excuse me, the daily. Sorry, the alert just went off. I need to go into my alerts tab and make sure that does not go off in there. I was testing all of my alerts today. Oh well. But yeah, I this is the daily chart underneath here. I'm just not. I just don't like the way anything is. I really don't. The weekly chart, I gotta say, the weekly chart is okay. Like, that's fine. But I will be much more comfortable if it pops back up above this line. Especially up here, to be honest. Like, once it closed up here, that was really good. But now it's all the way. Yeah, it's ugly. Ugly. Maybe this is all just a fake out and we'll just pop all the way back up. But I don't know. I am not liking it. I'm not liking it one bit. And probably down here is where I would target for Ethereum. 2,800 area, right below here. Why not? Okay, guys, so I just went through. Sorry for the lighting. I switched it up a little. I turned off a lot of the lights because it's 3 a.m. But I went through and I when I sold off a lot of my positions right here, I really just don't trust the market, and I would much rather have stables. I would much rather be in stables. So even on some of my longer term holds, like my KDA, like I just sold off some KDA at $8.30, about 25% of my portfolio of what's in my portfolio. I'm keeping 75% of it. I mean, that's plenty. I bought a bunch of Ethereum at 3K, and I sold off probably half of it. Bitcoin, I bought some of it, some Bitcoin at $40,000, sold off. Cardano, I just sold it at $1.55. That even though that one's doing pretty good. So yeah, I've sold off quite a lot. Are we gonna get a bounce? Look, we could get a bounce from here. You never know what's gonna happen. You literally never know what's gonna happen in crypto. All that I know is that, look, I have my trading account and I trade based off what I look at in these charts. If you have an investment account and your investment, like I also have an investment account, right? My investment account, I try not to touch. Like my investment account, I trimmed 25% off of a few investments in my investment account. But for the vast majority of my investment account, I'm still holding my investment account, even though I honestly don't know if that's a good idea or not, to be honest. But I'm still holding a lot of it. For my trading account, though, my trading account is going. It's in some trades, but the trades, they have stops, and I also sold off some of them. And yeah, I'm just trying to be cautious. You know, I think being cautious, being risk averse until, I don't know, until there's like the 40K was a great level to be risk on. You go up to 40K, go up to 45K, from 40 to 45K, risk on, boom. But then it's like, you know, seeing this type of crap, nah, I'm risk off again. I'd rather have stables. And if it comes back down to $32,000 okay, I'll say this, put this on the record. I think Bitcoin will go down to $35,000, or I think it'll go down to 37. Let's just say 35. Let's say Bitcoin's going to go down to $35,000, and people will say, "Oh, it's going to go to 28, right? Or it's going to go to 27." And then it'll go down to $32,000, and people will say, "Okay, it's going to 20,000 or it's going to 25 or something like that." I don't think it's going to go below 32. I think 32 is going to be the lowest. I don't see it going lower. So if it hits 32K, that's when I will go back in heavy long. But until then, I'm not very confident in it. Unless it flips, unless, you know, obviously if it comes back up and flips this 42,500 level, yeah, I'll go back into it. You know, I'll be more confident in it. But until it breaks this, like, nah, I'm not about it. You know, because we have this huge resistance here anyway. And what is this, 7%? So yeah, that's my thesis right now. I was bullish at 40K and I was bullish up to 45, but we did not get the bounce up to 45 and we stagnated, and now we're just dribbling down. So I think we're going to dribble down and then fall down to 32. But obviously we'll bounce at 37, we'll bounce, you know, along the way, but I think ultimately we'll hit 32 and then go back up from there and resume. I don't know if we'll resume the bull market, because honestly, who knows? This could be a freaking sideways market. What you don't want is like a freaking prolonged bear market, down to 25K or something like that. That would suck. Just down only, that would suck. But if we could get like nice bounces from here, go to the mid range, maybe 45K, and then like if we go down here, I'll buy it all here, I'll sell it all here I'll buy it at 32, I'll sell it at 45, and then I will wait. And if it flips 45, I'll go back in. If it's and I'll target the top. However, if it is, say, a swing failure pattern above 45, 46, and then comes back down to around 44, then I'll short it from 44 down to, I don't know, probably like 40 or maybe 30, 37, something like that. And I'll just play this huge range that we have going on from 30,000 or 32,000 up to 65,000 to 69,000. Like, this is the huge range, and that's basically what I'm gonna do. So I'm gonna do that, but also if it comes down, if Bitcoin comes down, I'm gonna be going heavy into alts as well, because obviously, like, some altcoins will pump by that time. So I plan on doing a lot of research along the way, updating you guys with videos that are really should be very helpful. Also, my risk management video is almost done. I've worked about 50 hours on it so far, so that will be available for everyone in the VIP and everyone who wants to get the course. So that'll be cool. And I'll have a free PDF, which is the same exact thing. It's everything that I cover. It's just in a PDF form, available for free for everybody in the free Discord group. So look forward for that. I'll let y'all know when that comes. Other than that, hope you guys enjoy this. Sorry, hopefully this didn't freak you out. But we'll have to see. We'll have to see what happens. Maybe we'll get a God candle all the way up to freaking 49. Who knows? But either way, I'll talk to y'all later. Keep on using those risk management, instead of like, keep on stacking sats. Oh, the other thing I want to say is that for your long-term investment account for Bitcoin, you might as well just start like dollar cost averaging, like, slowly in this entire area. Like, I would just dollar cost average. I'm continuing to dollar cost average, and honestly, if it falls down even lower, as the lower it falls down for my dollar cost averaging account, which I have a totally separate account. So I have my investment account, I have my trading account, and I have a dollar cost averaging account. My dollar cost averaging account, I'll buy a lot more from the money that I do have in my bank account, which at this point is not very much. So, because I invested all of it. So, I'll put a little bit more. I put like $200 a week. I don't put like that much into that, into my Bitcoin long-term dollar cost averaging. But, I do it. So, and I don't touch it, but I'll probably put more in, and I'll increase from $200 up to maybe like $400 a week, if I could even afford to do that, because obviously a lot of my money's in crypto and in real estate. So, and I got to pay rent and shit. So we'll see what happens, but, I'll talk to y'all later, and hopefully you guys are doing good. Don't freak out. Just, play the levels and, have faith, because honestly, even if this is a freaking bear market, like, who cares? Because we're going to have another cycle. And when we have the next cycle, holy crap, it's going to be bigger than anything than you've ever seen. So I'm pretty stoked for the future. I mean, it's pretty obvious. Crypto's here to stay. Crypto's the future. So let's get it. There's a lot of opportunities, a lot of money to be made. So let's try to make it, and I'm going to try to provide you with the best content that available. And also, I'm going to start a newsletter, so that will have a lot more content in it as well. So I'd say look out for that. You'll know when that happens. You'll know when that drops. I'm rambling on. It's 3:05 in the morning. I gotta go to sleep. I'll talk to y'all later. Bye.